Hello and welcome back to this channel. 4 golden Bollinger Band and RSI trading strategy you never ignore. This video will enhance your trading strategy using Bollinger Band and RSI, the golden pair of trading success. These are the best indicators that complement each other and bring more profit for traders. Here I'm going to share with you 4 golden trading strategies that can change your trading style to the next level. Before I talk about these strategies, I'm going to make you familiar with the capability of these 2 powerful Bollinger Band and Relative Strength Index RSI and demonstrate how you can use them in your trading setup. What is Bollinger Band and how does it work? Bollinger Band is a momentum indicator developed by John Bollinger, designed to properly identifying when an asset is in overbought or oversold area with high probability. Bollinger Band consists of 3 lines, namely the upper band, the lower band, and also the middle band, which is SMA 20 or simple moving average with 20 days period. The upper and lower bands are apart by 2 standard deviation, which shows traders how far the price is from the middle line or SMA 20. If the price is near the upper band, the stock price is high and you are in an expensive zone, because you are above the mean or above the middle band. If the price is near the lower band, the stock price is low and you are in a cheap zone because you are below the mean or below the middle line. Bollinger Band can identify the high volatility of the market by expanding the upper and lower band, and also it can identify the low volatility of the market by contracting the upper and lower bands. It is amazing to know that when it comes to support and resistance recognition, there is no indicator that can compare or compete with Bollinger Band, because it has 3 moving averages that can serve as dynamic support and resistance levels. These 3 moving averages is nothing but upper band, lower band, and middle band. Unfortunately, Bollinger Band does not tell you neither the strength and weakness behind the move, nor the direction of the trend. And for that matter, I use RSI to find the direction, strength, and weakness of the trend and ensure to double check the accuracy of Bollinger Band buy and sell signal. The next indicator I'm going to talk about is Relative Strength Index, RSI. RSI is one of the most popular and strong indicators developed by J. Wells Wilder in the year 1980. This indicator is designed to produce buy and sell signal and also show traders when is the best time to enter or exit the market. It also has the ability to gauge the primary direction of the trend. This indicator defined in percentage of buyers and sellers power in the market and produce the buy and sell signal based on leaving the overbought and oversold area. In this graph, I installed RSI with 14 days period on BTC stock D1 time frame. RSI, as I mentioned, defined in percentage between 0 and 100. When price is 100, it means all the market power is in the hand of buyers only. When price is in 0, it means all the power is in the hand of sellers only. RSI has 2 boundaries, namely 30%, and 70%, but you can change it yourself anytime. Let's say you can make it 20/80. When price is between 0 and 30, you are in oversold area or bearish area. When price is between 70 and 100, you are in overbought area or bullish area. When price is on 50% line, it means the power of buyers and sellers are equal. Now, when price is going up, entering the overbought area, and then return back and caught the 70% line while going downward, it generates a sell signal right here. When price is going downward and entering the oversold area and then return and caught the 30% line while going upward, it generates a buy signal right here. So here the traders use RSI to enter or exit the trade. The first golden trading strategy I'm going to talk about is Bollinger Band and RSI entry point using buy limit order. This is the price trend FAF stock D1 time frame of finance. In this graph, you see the trend is going strongly downward all the way toward the lower band. This is the lower band, and the price closes outside the lower band with a bearish candle. We have to record this close price of this bearish candle, which is 51.03, and place a buy limit order of 97% of this price. But we have to do it before the next day the market open. So our buy limit order is going to be 49.50. It means $1.50 below the close price of this bearish candle. Now look what happened the next day. We are already in the market and the price came down to 48.70, which our order is already filled. So we have to wait for the following days that the price go up, and I'm going to show you in the next slide how you exit the trade in order to make profit. Bollinger Band and RSI entry point using buy limit order continue. This is the same graph as we see before. I installed the RSI with 14 days period to double check the accuracy of my entry point or Bollinger Band entry point. The rule to exit the trade are as follows. We wait for the price to pass the 50% line on RSI. That is the 50% line. That is the 20 and 80 zone. Now, as soon as the price passes the 50%, then we can exit the trade. That's the rule. Now, on the day that we place a buy limit order, the price was right here. And on the second day, the price was right here, but it didn't pass the 50% line. The second day, the price was right here on RSI, and it is exactly this bullish candle, and the price passed the 50% line, so we can exit the trade. So but we have to wait for the next day to see the behavior of the candle or the market. If it go up, you don't have to really exit the trade. And we see here the next day the candle gap up and go up, so you don't have to really exit the trade. And the same thing here. So when is really you have to exit the trade? You have to exit the trade that you see RSI constantly going up and here it going down, it reverses. And on Bollinger Band, the price go up and reverses right here. So you exit the trade as soon as this bearish candle drop down below the close price of this bullish candle. You can exit the trade and put your stop loss 1 or 2 ATR above the high of this bullish candle. If the price didn't go up or past this 50% line in 10 trading day, you exit the trade manually to cut your loss short, because you lose a little bit money, but you don't want to lose more. So 10 working days, 10 trading days, you wait, and then if it didn't pass the 50%, you exit the trade manually. I use all the time this strategy and it worked for me. I am sure that if you try, it's going to work for you. Please let me know what happened. The second golden trading strategy is volatility contraction lead to volatility expansion. This is the price trend, Air Canada stock, the one-time frame Yahoo Finance. I installed Bollinger Band and RSI to demonstrate the volatility contraction lead to volatility expansion. In this graph, we see when the two bands are contracted, here and here, uncontracted, and come close to each other, the volatility is at its lowest level in both sides, and the trend is in consolidation and build up, and the moving average shows flat. That means volatility is at its lowest level. And you can see the same scenario in RSI. The RSI, it's in a straight line. So there's not that much fluctuation going on in both sides. And so this is the best place that you can enter the trade. And I recommend these two locations that you can enter the trade. And this will allow traders a tighter stop loss and increase their position sizing for the same level of risk. Now, when the volatility expands, the two bands become wider and the trend go up. In both sides, here you see the two bands become wider and the price is going to go up. And we see the same scenario in RSI. You see here the RSI, it's going up almost to overbought zone. And here in this side, you see the trend is going up. So since we are already in the market, we do not need to chase the market anymore, so we get the benefit. And you can exit the market and use your price action as I explained many, many times before. The third golden trading strategy is Bollinger Band buy and sell signal. This is ERX stock T1 time frame. I installed Bollinger Band and also RSI to check the accuracy of the Bollinger Band. Now in Bollinger Band, when the price is going downward and then exit the lower band with the bearish candle and close outside, and then return back inside with the bullish candle and close inside the band, it generates a buy signal. You can enter the trade as soon as the next candle, this bullish candle, passes the close price of the first bullish candle. Then you can enter the trade and put your stop loss 1 or 2 ATR below the lower band. So after you see the price is going upward all the way, and at this point the price reverses and you can exit the market right here. Now, to double check the accuracy of this Bollinger Band entry signal, we use RSI, and you see that RSI here, the price is dropping and going downward, the same thing as here. They're in line and come all the way here where the bearish candle exit the lower band, and here we are in oversold area, which the price is on 18%, or the price is on 18% RSI. So after that, the price leaving the oversold area and going upward all the way till here, that after the price reverses, and this is exactly the same location as where in Bollinger Band we exit the market. Now, in order the traders know the price at entry point is in the stock price ERX is $153 here, and when we exit it's $206, which you make a very good money if you enter the market at this point. Now we have the same strategy to exit the trade. Let's say if the trend is going upward and then the candle exit the upper band with the bullish candle and close outside and then return back inside the band and close inside with a bearish candle, it generates a sell signal. In order to exit the trade, you have to wait for the next candle to drop below the close price of the first bearish candle and put your stop loss 1 or 2 ATR above the upper band. So you see, this is another golden trading strategy that you can use to enter and exit the trade. The last golden trading strategy is Bollinger Band and RSI entry signal using bullish and bearish divergence. This is the price trend L stock D1 time frame. When price is making higher high but RSI is making lower high, we have a bearish divergence, and this is a sign of weakness. So traders should exit the trade. When price is making lower low but RSI is making higher low, we have a bullish divergence, and this is a sign of strength, and traders should enter the trade. In this graph, we see the price is making higher high. That means this is higher than here. So the price is making higher high. Whereas the RSI is making lower high. That means this is lower than here. So to exit the trade, and you see that this is lower than here, and then after that you see that RSI is going downward. You see it's going downward all the way. So in order to exit the trade, it's very simple. Now, I explained in my previous slide that when the trend is going upward and reach the upper band and exit the upper band with the bullish candle and close outside, and then return back inside the band and close inside the band with the bearish candle, it generates a sell signal. In order to exit the trade, you have to wait for the next candle, this bearish candle. As soon as this bearish candle drops below the close price of this candle, you can exit the trade and put your stop loss 1 or 2 ATR above the upper band. And you can have the same strategy for bullish divergence. So this is another golden strategy that you can use to enter or exit the trade. I hope you enjoyed this video. Wish all of you a good luck, and don't forget to smash this subscriber button. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.